and maybe 22 at night. So it's really nice to be here during the fall, winter, beginning of the spring. In
Yeah,
general, till May, here is amazing.
is good. Yeah. Okay. So May, so June, July, August, September. So 4 months are not so comfortable. And then the other
Actually,
18.
this year I have been here in June and it was not so bad as I thought. I mean, it
Oh,
was hot, but not crazy.
okay. Well, good.
So the worst is July and August. Yeah.
Yeah. Okay. But you manage, you survive. You go from air conditioning to air conditioning probably.
Oh, yeah.
Yeah.
Like everyone.
Okay.
Great.
Wonderful
It,
turnout. Thank you all for being here. Ian,
Hi, Ian.
you ready to roll?
yeah, I'm assuming this is everyone. Hello, everybody.
Hi,
Th
Ian.
Thanks for tuning in. Um, I think in terms of the agenda, we'd just to sort of to report or update each other on our respective markets. So, um, given that we've got quite a number of people on the call, it might be a good idea if we can just sort of um, maybe keep those to a minute or two each, and then we've a market report template we're just trying to roll out. So we'd circulated that earlier, so we'll just take any feedback on that. I think we're obviously all looking forward to visiting Hans Peter in Amsterdam. So we'll be touching on Amsterdam, just sharing clients as well. All the preparations for the European affiliates for Expo Real. And then finally, I think just touching on expanding the CORFAC network internationally. So on the market report front, I don't know if anyone's particularly keen to go first. Right, well, in which case I'll do it. So I suppose in Ireland, just to touch across the sort of three principal asset classes. In offices, we've continued to have zero new development. So what vacancy we have is now being soaked up. So we'll be issuing some research shortly, just predicting that rents will rise. And we've certainly we've got the champagne problem of a lack of stock to let at the moment, rather than units that are not shifting. Investment wise, we've seen the return of the Germans. So Decker have bought here, which is hopefully a sign of the return of German core money. Other than that, the market has been solely supported by the French SCPI funds. So that's French retail investors who are typically chasing a lot of income. On the retail side, there's been lots of activity, primarily led by Realty Income, who we've acted for. So happily, we've been on the buy side of a lot of that. And also by a lot of private equity buyers buying covered shopping malls. Again, no retail development, and vacancy is very, very low. On the industrial side, we've seen a bit of a slowdown in the market here. So sheds certainly over the what will it be, 10,000 square meter mark are now starting to stick a bit. So that's resulting in a bit of a slowdown in development, and we're seeing a number of investors try to exit industrial portfolios now. So it'll be interesting to see how those price. And then finally, on the residential markets here, we have relaxed rent controls here. And that is hopefully going to result in new development recommencing, because I think in common with virtually everywhere, we have a housing crisis, not enough places for people to live, which has resulted in extreme rent inflation and extreme price inflation. So that's the view from Ireland. I don't know if anyone would like to take us through their market.
Well, it's fine, Ian. I think we have a lot in common here. So I heard a lot of market situations that align with our business. So I wrote a little things down. So that first half of this year we had a take up of offices at a little under 240,000 square meters, which is a decline of 20% compared to first half year last year. And from this take up, 54% took place in Amsterdam. So the major of the bigger deals also took place in Amsterdam. And that is an increase for the position of Amsterdam in the total take up. More than 50% more take up in Amsterdam. We have a total supply of 4.15 million square meters, which is 8.5% of total office stock. So it's a little bit too much still, but most of the supply is old-fashioned or outdated or waiting for transformation. Average rental price throughout the Netherlands went down a little bit to 130 euros per square meter. And the highest rental level we make on prime locations here in the South X area in Amsterdam is 650 euros per square meter, which is really high. What we see also is a tendency for working labor to go more often to the office instead of working at home. Also partly driven by large companies, which I think you are familiar with. I think it's a worldwide tendency. What we see that the larger companies want to have more often their workers in the office. About industrial and logistics, we had a take up of a little under 1 million square meter in the second quarter, which was the lowest since the last 2 years. And that's because of the geopolitical and economic uncertainties that we see that a lot of users of mainly logistics take into consideration, and they are just awaiting what will happen in the next few months. Some supply went up to a little over 9 million square meters. So let's say about 10% we have availability. We have at the moment a low demand for the largest surfaces. So let's say up from 25,000 square meters and higher because of reasons I just mentioned. We have at the moment the largest single supply DC center is the former DC center of Blokker, which was a large household retail company. They went bankrupt. Not the privately owned retail stores from the family Blokker, which we may manage for a part of them. So that largest DC distribution center is a little under 100,000 square meters. So we are all trying to find tenants for this large one, which is quite unique building, also very well situated. What we also see is an increase in resistance of new DC developments by the municipalities. We call it on Dutch verdozing. It's called so the big boxes they really don't appreciate in terms of landscaping and beautiness. And what we see is the net congestion is becoming more and more a problem here for new developments of logistics, but also on other developments in the Netherlands. With regards to retail, that take up went down by 6% over the second quarter to 141,000 square meters, and totaling for the first 6 months of a little under 250,000 square meters in the first half. Which is not so good, but it looks like a little stabilization. We have lots of years of decline of transactions in the retail sector, but it seems that because of the new regulations for the residential market is forcing private investors to go out residential units and step into retail units. And in terms of investments, we see that in the first 6 months of this year, in the second quarter, we had a totally investment volume of 2.5 billion euros, from which 1.5 billion euros was in residential investments. And the total investment volume more or less stabilized compared to last year. What we see is a big decline in investments in logistics and industrial spaces, about a 30% decline compared to last year. So what we also see, and that's also to compare with you, Ian, is that we see also the German investors coming back. As we speak, we just finalized the onboarding of a new residential portfolio, which was just bought this summer by MEAG, and they bought it crazy enough from Union, and it's just realized about 6 months ago. So it was about a little under 200 resi units, which is now under our management. So that's it for the moment from the Netherlands.
Thank you. Thank you. I would continue on a brief update on Romania. So first, few general remarks on our economic context. You know, we had elections recently. We are now in a formula with let's say a good and trustworthy president and also trustworthy, very capable prime minister. The political party, okay, keep having their games ongoing, but nevertheless, it seems like Romania is led by a professional team finally, and that they are on to doing the reforms that have been long delayed. So it is a period of multiple shifts and multiple economic transformations. There is a recent increase of the VAT from 19 to 21%. Also, the state institutions are following a process of reform in this period. So it is not, let's say, a great period, but if they will do what it is hard to do, but necessary, Romania has a chance in 1-2 years to be on a safe track, you know, and on a good on diminishing the deficit, which is huge nowadays. Coming back to the real estate market, we are focused, as you know, on the office and on the industrial segment especially. And these two are showing resilience, yet with slightly distinct evolutions. On the office segment, the first 6 months have been showing a slight decrease of the transactions. So we had about 120,000 square meters transactioned, and half in Bucharest, and half of this amount have been new transactions, while the rest have been 55%, something like this, and the rest were renewals and renegotiations. As you mentioned, on the other markets, the office supply is not coming. So this year we will not have. It is the first year in 22 of activity in which we will not have any new stock in Bucharest being delivered. Yet for the following period, in 2026 and 27, there are already 3-4 large projects announced and initiated. So at least it is a hope in there. We also hope that the activity in the office will be a bit stronger. The large companies started to put a bit more pressure and incentives on bringing people to the office. But now with the summer, it is a tricky period, and we expect that starting the autumn for the activity to be back on track. Regarding the industrial segment, this is where the activity has been, let's say, more positive. The total leasing activity is estimated to be something like 10% more compared with the prior year. Also, there is a modern stock which is being built, and Bucharest in particular has an interesting infrastructure being heavy under construction now, namely a second motorway, a second ring road that will be, let's say, great for the industrial segment. Also at country level, we have in these last 2-3 years advanced quite fast, and I think with European financing on a motorway towards Moldavia, which is a part of the country which has been kind of cut and very difficult to be accessed till now. But in this moment, this motorway is almost completed, and already large players are showing great interest in going there because in Moldova we have great conditions for production and lower labor force and high availability. So this is quite great. Moldavia is the part which is quite next to Ukraine, and we feel that this motorway has been pushed over and delivered also due to the context with and being needed for whatever purposes were on the military side and administrative. The investment part is quite stable. We have a total of approximately 400 million investments in the first half, which is rather in similar level with the prior year, with the prior semester of 2024. Also we feel that if the state will prove more credibility further with these actions that are initiated, this will lay a road for an increased rhythm of the transactions on the investment side as well. A bit the situation is now under change, and people are staying and looking carefully what is happening here. But we are positive that if they succeed, at least half of what they say they will do, this will be good. The residential market, on which, just a short glimpse, we are not working anymore directly. We resume to business part, but it's going quite okay. The construction prices went a bit high, and therefore the acquisition prices as well. In Romania, you can buy, let's say, above average, close to luxury apartment in a highly central area for something like 3,000 euro per built square meter, or let's say 2,700, 3,000. This is the average. And there are some great projects which are initiated in this moment. Yet it is we are not very optimistic. Let's say on the long run, we have to see what will be the purchase power after these reforms are being done and after the financing of the military and whatever important expenses we have. But the situation is quite stable and it's going without major drawbacks. Kind of this is what keeps us busy. We are all watching what is happening with all the summits and all the presidents meeting and hope for the things to chill down a bit.
That's great, Mirella. Thank you. Any other volunteers to
Can I
summarize their
continue
markets?
also on side of Dubai? So one more time, happy to see everyone. We have prepared also our half annual overviews for the offices and for the warehouses. So after the call, I may share it in our WhatsApp group. We'll just mark briefly. So, of course, in Dubai, summer is the period when a lot of people are going on vacation. So in the summer, it's a little bit more slower market than during the winter time. But anyways, regarding the offices, the office market in Dubai today is around 10 million square meters. We have a very small vacancy there, around 4-5%, but in some areas, in some districts, it even can be around zero. Just because for the last years the market was mostly focused on the residential real estate, so they were not constructed any new office towers. But anyway, now we have some new projects coming up. They were mostly announced in the end of the previous year, in the beginning of this year. So hopefully in the end of 2026, in 2027, we will have some new vacancy coming on the market. So as I said, for now, the level of the vacancy is very small. That's why the rent rates are growing up. Mostly it's now the market of the landlord, because everyone understands that tenants have not so many options to choose. That's why the pricing going up in almost every quarter. The most active now is the companies from IT, from media sector. Also quite active the companies from different financial services and consultancies, and of course construction and development companies, because also like Dubai is a big construction area, so there are a lot of things going on here, so they are also very active. Also, I should note that there are a lot of international companies coming to Dubai, especially from Europe. Actually, the couple last deals that we had, it was the United Kingdom companies from the financial sector. So the market is enough busy. If we take a look on the warehouses, it's very specific market here, because the main point is that for warehouses, there is no land market here. So generally all the land owned by Sheikh, and then it divided between different zones. So the biggest part of the large international companies who come into Dubai, they have the build to suit projects. So it's also very interesting segment. The whole market of the warehouses in Dubai is around 2 million square meters, so it's quite small, but now it's also developing very actively. They now start to make some new speculative projects. So now we have around 4 or 5 large projects by different developers that will be offered to the market for rent. But also the vacancy in the warehouses is very small. It's around just 2-3%. So that's why a lot of new companies or companies who want to expand, they now looking also for the promises even on the stage of construction. So I think that this is briefly about 2 main segments, and in more details I will just share the PDF file so you can take a look much more deeper, and if you'll have any questions, we'll be happy to answer.
Thank you. Anybody else want to share? We're almost half an hour through, so we'll try and keep it moving.
Yeah, I'll jump in really quick. Just in London, there's been in the office area, there's been lots of take up of all the good quality buildings. So the new developments, the refurbishments, there's a real lack of take up of the poorer quality stock, which is putting the pressure on rents. So rents are going up. There's no development pipeline really from over the next sort of end of 26 through to 28. There's hardly anything coming through, which is similar to what you were saying, Ian. It's going to put a lot of tenants going to have to pay a lot more for poorer quality space than theory or refurbished space. And they're also there'll be more competition, which will then just drive up the rents and less rent freeze and so on. There's been some big deals happening, but all again on the good quality stuff. HSBC just took another 200,000 square foot in Canary Wharf, even though they don't want to be there anymore because they moved to central London instead of Canary Wharf, a little bit odd. But there's some really big activity, which is quite exciting. It's really hard to find good space for tenants now. Alistair and I are acquiring spaces around at the moment, and it's hard. And then you're getting into competitive situations in some buildings. On the investment side, it's been driven a lot. A lot of buildings have come to the market, they've been pulled back because they haven't sold. But on the flip of that, the ones which are selling are being bought by, or Ares are being buying everything in London at the moment. So I don't know whether they ventured over anywhere else to Dublin or in Europe. But Deco again, they've been buying some bits. Deutsche or DWS were under offer on a few bits, but that got pulled. And then Land Securities are selling a lot of their, there's the development stock they've got. GP might do the same. But interesting, Land Securities are selling a big building, which unfortunately we were on the leasing. They had about 20 viewings or so on, or 20 offers. 18 of them were for non-office products, so student housing, hotel or residential. So there's a lot of change of uses as well coming through and hitting demand. But that's roughly it really. It's been a bit similar theme, flight to quality. That's sort of where we are at the moment. But it's good, it's exciting.
Grace, Francisco, you've got your hand up there.
Yes, I just wanted to be next. First, I apologize. I don't have my camera on. I'm heading outside the Greater Metropolitan area to visit a client. But yes, to do a quick overview of Costa Rica as of now. The markets, all three markets have been pretty stable since our last call. We are heading into presidential elections next February. And even though I don't like or I don't agree with most of the things that the current president has done, I have to be honest, and he's done pretty well in the economic side. For the first 3 years of his period, Costa Rica has been #1 in a ratio that is the gross domestic product divided by the foreign direct investment. So he has attracted many new investments to the nation. And but as always, when you are under new elections, things tend to slow down, right? Businessmen and companies are awaiting who's going to be the next president and which party is going to command the powers in the nation. But usually Costa Rica has been pretty stable, a pretty central governments. So we are just hoping that everything goes pretty fine. And the overall numbers for the markets here are right now. Industrial market is below 5% of availability. The office market, thankfully, is now below 20%, is slightly below 18% right now. And the retail market is also pretty stable, around 8%. Some regions of the nation are over 10%, but some others are below 2% in the retail market. So it depends in the region where you look at. In the residential market, we don't have as much of the problems that you have mentioned of rent controls and all that. So it's pretty stable as of now. Moving into buildings instead of into townhouses. Right now, the country and many millennials and centennials willing to rent instead of buying. So this has opened a new market for investors to buy many pieces or many units within the residential market in order to rent to these guys. Thank you.
Thank you.
That's great. Thanks, Francesco. I think Andy, you had yours, and then Esteban.
I'll just be quick for Scotland. So capital markets, we've seen a bit of a slight improvement in quarter 2. So we think total returns this year in Scotland will be, on the whole, much better than last year and the year before. Office sales particularly have picked up a bit in Q2. Glasgow and Aberdeen, which is the oil capital, but I think that's more to do with lower pricing. Edinburgh, which is the capital, still setting fine yields and big tickets sales through there. We've seen an influx of French investors and similarly some US people. A lot of the money that's coming in seems to be VC money on the whole. On the living side, a bit like Dublin and the Republic of Ireland, Scotland has some political issues that we have to contend with. So the Scottish Housing Bill is still not through Parliament. Colin and I monitor this quite closely, but we think it will be the end of this year before that goes through. And then next year we have elections in Scotland, which causes more uncertainty and affects investor confidence. The real problem we have at times is not having enough evidence to advise the Parliament, albeit Hines, which is one of our office clients in Glasgow, have just purchased a major build-to-rent scheme of 400 units from one of the big pension funds. So there's people still looking to invest in that and obviously getting in early before rents go up. Offices, which is where Colin and I mostly spend our time in, is just strong rental growth. Centred in Glasgow, there's quite a disparity in rents and prime rents in Glasgow and Edinburgh. But we think there's going to be some good growth coming in Glasgow. Aberdeen, a bit sluggish, still being affected by the slump in oil. So the UK government, London, has still got these kind of caps and stuff on profits for oil companies. So that's causing some issues there. And logistics, just touching that briefly, just stable occupier demand, slow growth due to construction issues. I think there's still problems in getting construction up here in Scotland. Some of the main contractors don't operate up here. Concrete, believe it or not, is still very expensive on the back of ongoing issues over in Eastern Europe. Retail, I think modest sales growth across the UK, which affects in Scotland here. And Glasgow still leads the way on retail rents. Mostly really repurposing of shopping centres. And Charlie was talking about Landsec selling in London, but Landsec are not selling in Scotland in their main shopping centre in Buchanan Galleries. They had plans to turn that into a very big office park in the centre of the city, but they've just shied away from that. And they're repurposing and investing in that shopping centre, which is quite interesting. And then I know Hans Peters was talking about data centres, but Scotland has seen a major influx. It's slightly cooler here than London. So with major people like Amazon and Google and some other the big IT companies are searching for large swathes of land. So there's about 4 or 5 deals that Colin and I are aware of. Some of these big people are in buying up land. There's also some battery storage opportunities that are flying about the market. So yeah, that's update from me.
Yeah. Don't you have
great. Thanks, Andy. Oh, sorry.
Don't you have electricity supply problems in your country?
Well, we'll see what Charlie and Alistair say, but in Scotland we've got a surplus, and what's happening is we are exporting it to our cousins and friends south of the border. So England and Wales are getting surplus because we've got lots of wind energy up here. It is a wee bit windy in Scotland, so we export more than we use.
Right.
And I think Ian's laughing. They'll probably give it over to Ireland as well for good measure, but I'm unsure if the Barnett formula that we get back is two-way street. Anyway, don't wish to be political.
There's plenty of wind in Ireland, Andy, don't worry. And Esteban, I think you're going to bring us home on this segment.
Yes, real quick. I would like to introduce first Mauricio Lopez, who is going to be joining these conferences. And he's part of the team. And well, I just want you all of you to know him real quick. And Andy, I was in Scotland this past July. It is beautiful. I love it.
Oh, you should.
I went with my family.
Yeah, well, Colin was in America, so I think he was in Chicago actually, because it's holiday time in July. But you should let us know. You should come and see us. You should come and see us.
I will definitely. I have to play in San Andrews.
Colin's a golfer. Colin's a golfer. He'll sort you out there.
So regarding the market of Mexico, as you know, we're leaving the nearshoring. A lot of companies investing in Mexico. Now these have been slowed down because of the tariffs of Donald Trump everywhere. We know that. But nowadays, the Mexican government is negotiating to reach 15% of the tariffs. Nowadays, we have one of our most important industries, auto parts, all the automotive industry. We nowadays have 25% of these tariffs. So they are hoping to renegotiate up to 15%. Steel and aluminum went up to 50% for those that doesn't reach the USMCA agreements. And well, this of course slows down all the investments. Now we have a new tariff for all the goods and merchandise that goes beyond the 25 up to 30% more. So again, they give us 90 more days to renegotiate that. So nowadays we have 25%. So let's see what's happening. Regarding the markets, we have different markets in Mexico. We have the north, the Bajío region, which is we have a lot of automotive industry, and then we have Mexico City and Guadalajara. Those are like the largest markets. Regarding the Bajío, we have a 3.5 vacancy, and the lease rates are between $5 and $6 per square meter. Here in Mexico, we manage the metric, so we always talk about square meters. Regarding Mexico City is growing a lot. There's a lot of investment taking place. A lot of Amazon's, Mercado Libre, this kind of warehouses. And the rates, the vacancy is 1.27 for the second quarter of 2025. And the rates are a little bit higher, between 7 and 9.3 US dollars per square meter. The north went down a little bit, but even though the rates they still high. I mean, it's all the prices are around 7 and 8.5 US dollars per square meter. And well, that's a quick view of what is happening in Mexico. We are waiting until I think that everything is going to be happen on the 26th, because then on the 26th is where the USMCA has to be renegotiated. So probably there we'll have more certainty of what is going to happen in Mexico. But we're still having a lot of investment from China, from Europe. We see ABB, for instance, from Swiss is investing a lot of money here in San Luis Potosí. We have Volvo, BMW is having an expansion, and they are bringing a lot of suppliers to this area, to the Bajío zone. So let's see what's happening. That's a quick brief so you can get to know what is happening here in Mexico.
That's great. Thanks, Esteban.
Could I follow Mexico?
Yes, of course. Sorry.
No worries. Thank you very much. Yes, Tony Letvinchuk from McDonald Commercial in Vancouver, in Canada. Just to follow up to what might be called the tariff disruptions, there is some positivity as a result, which is countries, industry is having to be nimble and react to the latest impacts of how the tariffs are impacted. It's great to follow Mexico because in my case, I love tomatoes, and I love the question, do you call it tomato or tomato? Because in the case of Canada, our tomato exports from Mexico have grown about I'm going to say 5 times since a few years ago. There was a new, I understand there was a new agreement reached with Mexico. And I thought I heard in the press that in the not too distant future, about 40% of our tomatoes will be coming from Mexico.
Okay.
And I think that's helpful to Mexico in that I believe there's a new tariff impact of about 17%. Nothing is an A plus B equals C scenario anymore. Things, and not that they ever were. And so at the end of the day, there's going to be lots of adjustments and shifting. And in the case of Canada, one of the maybe unintended sort of benefits or positive scenarios as a result of tariff disruption is that there is an openness now to maybe more utilization of our natural resources, wherein previously there were a variety of stakeholders and reasons not to explore and not to take advantage and build the infrastructure necessary to get our goods around the world for a cleaner type of energy than what's being used in other places. So that is a positive. There continues to be interest in our markets. Of course, Vancouver in particular is in large ways a lifestyle city. So we don't have the same sort of large tracts of developable land. So we're a tight real estate market. Prices have obviously come off to a certain extent on income properties. Office is still challenging. And I think that's a sidebar to our conversation, which is if you look at the equity markets, particularly in the US, which is obviously a dominant and very strong market in equities, much of it is based on the unprecedented amount of investment into AI, particularly out of California. And so if you really break down the equity markets in the US and to a lesser extent in other marketplaces, that AI growth is actually unparalleled. So that's just one thing to keep an eye on. The land is compressed in terms of valuation for residential land, for example, because we have less offshore interest to a certain extent from Asia, although there still is, for other parts of the world, interest here in Canada. So it's still a challenging real estate market for the reasons that were mentioned by other players, with the interest rate shock of about a year and a half ago still filtering through the system, and developers have been challenged in the last 12 months. At the end of the day, we're looking at, due to the less build activity, which people are talking about, there will likely be continued shortages of rental and home ownership accommodation down the road. And final comment would be on industrial, which is softening to a certain extent, but there still is growth. And so that's helping us in our region. Thank you.
Oh, I have a question for you. How is everything going with Air Canada? I just arrived from Canada this Tuesday.
Yeah, the good. I believe the labor disruption has been settled. They're back to work.
I went I went with my son. He's studying a boarding school. But his luggage hasn't arrived yet.
Oh,
so let's see what is going to happen.
What market is he in? Is he in Vancouver or?
No, it's way in the other side, in the East Coast, in New Scotland.
Oh, okay.
But yeah, it was crazy. It was crazy. Thanks God, everything now it's okay. No, the strike is over.
It was settled yesterday.
And it was. I know that it was losses of around $100 million US, no, per day for that strike.
Cool.
And let's see what happened, no, with the economy. I mean, it was crazy, all Canada, but very nice country as well.
Yeah. Thank you.
Thank you. Daniel, I don't know if you've any commentary on what we should be doing with our gold bars.
Absolutely. Well, people have been talking about tariffs and 15% and 25%. I guess they would be music to the ears of the Swiss, which have a 39% tariff. And the reason for that, as Ian well knows, is that most of the gold that is imported to the United States actually comes from Switzerland. They don't mine the gold, but it comes here to be melted into ingots and measured and given a Swiss certification. And I guess when Trump looked at the trade imbalance, he saw that a lot of exports from Switzerland were going to the United States. But fortunately, they realized because the bullion market in the United States said that it would dry up and move to other countries if the 39% tariff held. So there are some exemptions for pharmaceuticals and now for gold. So we're doing okay, but that means that you should bring your gold here, and you should actually bring your cash here too, because our real estate market is doing well. Good buildings sell, bad buildings don't. We're fortunate to have both a domestic and an international market investors, and on that front, let your clients know that Switzerland is certainly open for business and a good place to place your gold and your cash in real estate. Thanks, Ian.
Thank you. So just to cover off the other items on the agenda, we've 10 minutes left.
Ian,
Oh, sorry.
I think we still got Ray.
Did I miss one? Sorry, I didn't see them on the call.
And I see Anna, Anna from Poland as well. So I don't know if they want to talk, but anyway.
Hi. Tony covered things for Canada, so let me give the time to others.
Thanks, Ray. Sorry about that. I didn't see yours a phone number here rather than a.
Yeah.
Okay, I can continue and quickly speak about Warsaw and regional market. In the yes.
Yes, please.
Yes. Okay. In the first half of 2025, the Warsaw office market showed strong momentum, while regional cities struggled with the high vacancy and limited new supply. If we speak about Warsaw, vacancy in the capital stands at 10.8%, only 7.8% in the central versus 30.3% outside. Demand reached over 301,000 square meters, with regionals renegotiations making up more than 40% of all leases. Rents are rising. Prime office exit 30 euros per square meters. Central locations stand at 28 euros. And non-central markets at 16 to 19.5 euros. Operating costs average 28 Polish złotych per square meters, up 3% year on year. And investment activity totally for 111 million euros, of which 216 millions was located to Warsaw. Domestic capital represented 44% of transactions. If we speak about regional markets, stock amounts to 6.75 million square meters. Vacancy remains high at 17.5%, with the highest levels in Kraków and Łódź. New supply is minimal. Only one building of 2,400 square meters delivered in Poznań. Demand reached 387,000 square meters, up 28% quarter on quarter. Kraków led with 44% of take-up, followed by Wrocław and Tri-City. Warsaw is firmly towards a landlord's market, while regional cities remain tenant-friendly due to high vacancy and limited expansion. That's all on my side.
That's great. Thanks. Thanks very much, Anna. And is there anybody else I've missed before I? Great. Okay. So I think just to go through the other things on the list we had there before we all sign off. The market report template, which has been circulated to you, obviously just welcome any comments you might have on that. And I suppose, in a way, it will save us all updating each other verbally on these calls, but it is also meant to be quick and easy to for you to fill out, so it won't take too much time. And if it is done once a quarter by all of us, it also provides a resource that we can share with our clients, giving a quick overview and demonstrating to clients that, we've coverage of and links to other markets. So I'd encourage you to give feedback on the template to the CORFAC HQ team, please. And then we might aim to kind of issue the first edition at the start of the fourth quarter. So I suppose that would be backward looking over the third quarter. Again, I mean, that can be used in a variety of ways by us all, hopefully, and will hopefully be a useful resource.
And Ian, I'll resend that when I send out the recording for the call.
Great,
I'll
thank you.
resend the templates to everybody.
Ian, I have a question. Do you aim to have filled in, let's say, for example, the yield? Do you look at the prime yield, or do you want a lowest and highest yield compensation? And same goes with rental levels.
Yeah, well, I mean, I think oftentimes with this sort of reporting, it's really, perhaps best just restricted to the prime rate. And then, if people want to know specific detail, hopefully they'll pick up the phone and give people a call. And similarly, I suppose some of us use square feet per annum, some of us use square meters per month. So, we'll maybe need to iron out detail of at that sort of level as when we're sort of presenting it. But I think in the first instance, if people can just feedback. Now, I appreciate not everybody covers every market that is demonstrated there. So they may have to be slightly different for every country, but the idea is that there's not too much detail. It's easy to do, and really just more. It's less meant to be educational and more a demonstration of the number of firms in CORFAC, and more an entry point for people.
Yeah, I would suggest to put also residential investments to the scheme. I think that's also a part of our investment activities. I think all of us are doing this, I hope.
Yeah, many of us are. That's it's certainly been clear on today's call. So then just on the sharing clients item, I'll come back to the Amsterdam Expo. Just off today's call, we mentioned Mayag, Ares, Hines, French funds, who and I suppose this is slightly European centric, but all of these are people that I am, we are dealing with daily here. I had lunch actually yesterday with somebody from Manova who are based out of Munich, who mentioned they knew Colin in Glasgow. So again, I suppose it just underlines to me that we share a lot of common contacts and clients, and I suppose that'll be the kind of, once we've got the template up and running, will be the next focus for us, I think, to just try and work out a better way of sharing our client contacts and trying to help each other out with introductions to the likes of Ares, Mag, or whoever it might be. So just to make that point. On Amsterdam, is there? I don't know, Jonathan or Hans-Peter, if there's anything you particularly want to say about that.
About Amsterdam, or about the sharing of candidates?
Yeah, no, I was moving on, but
because I think perhaps we can try to work out a kind of a scheme or something where we could ask our international clients just easily to fill in the sheet and tell us in what other countries they are interested in investing in, and then we can share it in a mutual platform to see what we can and see it as a kind of a marketplace to bring both supply and demand to each other.
Yeah, no, I mean, and in the end, that is the kind of the point of the CORFAC thing, that we can sort of try and make these introductions for each other where we've had success for international investors.
Yeah. Okay.
Yeah, and I see Andy's made quite a good suggestion there in the comment section, that we can just list out the top investors and occupiers in each market, and we'll then be able to establish if other people know them.
Yep.
Sorry, I'm conscious we're coming to the end of our time now. So is there anything that we need to say in particular, Jonathan, on the Amsterdam conference?
Unless Hans-Peter or Diane have something to add, I don't. I hope we see you all there. Very exciting. Hans-Peter, thank you for all your work.
Yeah, my pleasure. My pleasure. And sorry, Diane, I think I had some misunderstanding about the program, so don't take it personally.
Oh, no worries. No worries.
If I was a little bit worried.
Hans-Peter, your English is better than my Dutch, so it's all good. But I just want to say what a great job. Hans-Peter is very connected. He has connected us with some really great speakers. We're looking forward to a great program. We have receptions, late night pub meetups. We have a canal tour. We have great programming. And then we even have provided an afternoon free so that folks can wander on their own and explore Amsterdam in any way they want to. And we won't ask any questions about how you spent your afternoon. You can quietly come back to the hotel and report the next morning for programming. Yeah. And we won't ask any questions. But it's a great time of the year to be in Amsterdam. The weather is great. We have lots of folks coming. The hotel is good and full, and we're just working on the final details. We welcome anybody. If you're still interested in registering, the early bird deadline is next Friday. There is still hotel availability in Amsterdam. I know one of our American folks was looking and found a Radisson Blu nearby that was within walking distance. So let us know if you're interested, and we'll help you get there.
And Diane, we have our conference meetings. We have them also in the Grand Hotel, in the Sofitel Grand Hotel.
Yeah, everything takes place. It's a beautiful hotel with a gorgeous courtyard. We have all our meals on one side in the newer side of the building, and then the programming is in this really old, sort of stately looking meeting space with wood paneling and really cool lights and whatnot. So we'll all be together for the days that we're there. Plenty of networking opportunities and education.
Great.
How are the numbers looking at the moment? How many people are coming?
I think we have about 73 registered, and we usually, with the early bird deadline coming up, we'll get a bump with that. So for example, I see there are folks that have hotel rooms that haven't registered for the meeting yet, and I'll start nagging or momming them, as I say, like their mom. Don't forget to do this. Don't forget to do that. So we'll get those numbers up.
And is it possible to circulate a list of all those coming before we get them?
So thank you for asking, Alistair. We have a conference app that's downloadable. And that app will list all the attendees, their photos, phone numbers, contact information. And it typically comes out about a week before the meeting. We're working hard to get that launched further in advance. But that information will be made available with the schedule, locations of all the activities, which are mostly at the hotel. All kinds of information will be in there. And I'm happy to answer any questions if you want to shoot me an email.
Great.
That's great. I think Expo, there's a number of the firms attending that, so we'll and we can probably pick that up at the conference. I don't know if there's any new firm news that you want to mention, Jonathan. I'm not aware of any anyway.
No, this is just what I say on every call. If you have clients or people in markets where we don't have offices, particularly Spain and France, and any others, please keep in mind, when you're dealing with those people, and think CORFAC. That's all. Thank you.
Okay, well, thank you. Thanks everybody for your attendance there. We've slightly overrun, I'm afraid, so it's a bit rushed at the end there. And we'll look forward to seeing you, as many of you as we can, in Amsterdam next month.
Great. Thank you very much, Ian.
Thank you. Thanks very much. Thank you.
Thank you.
Cheers.
Thank you.
Bye-bye.
Thank you.
Bye. Bye. Bye.